You've worked your ass off to build something real. Now, you're scaling globally, and the last thing you want is have your income disappear to tax. Hong Kong, legendary territorial tax and a gateway to Asia. But Dubai, zero personal income tax and booming free zones. And I just spent 3 weeks digging into 2025 updates across both. What I found, especially about Dubai's new corporate tax changes, shocked even me. Most people think that this decision is just about finding the lowest tax rate. But this is like buying a car based on only a fuel economy and ignoring speed, safety, or range. So hit that subscribe button because today we are gonna dive into all the headlines and beyond that. I'll break down which jurisdiction truly fuels wealth based on taxes, banking, legal structure, and long-term global positioning. So let's start with what actually matters, where you're going to build your empire, because getting this wrong isn't just expensive, it's soul-crushing. Hong Kong remains a world-class financial center, and you get incredible banking infrastructure, direct access to mainland China, and over 40 tax treaties to prevent double taxation. So we're talking about a city that's been the gateway to China for decades already. But political tensions with China have spooked some investors recently. Bank of America projected in 2021 that capital flight from Hong Kong could reach nearly $76 billion by 2025. And some days Hong Kong feels caught between two worlds. Now, let's look at Dubai. Completely different energy, by the way. Dubai welcomed more than 25,000 new entrepreneurs in 2024 alone. So that's not random. It signals a clear shift in global business trends. The UAE has positioned itself as a global hub for fintech, crypto, and international business, and government policies actively courting entrepreneurs from around the whole world. And most people don't really realize that Dubai isn't just about oil and money anymore. Walk around Dubai Internet City or the IFC, for example. You will see why everyone from Silicon Valley starts up to European conglomerates are setting up shop there immediately these days. So now the question is, what is driving this? Well, the UAE has been ranked #1 globally for the 4th consecutive year by the Global Entrepreneurship Monitor report for 2024 and 2025, surpassing many advanced economies. And the choice comes down to this. Hong Kong gives you established financial infrastructure and also Asian market access, and Dubai gives you entrepreneurial energy and the Middle East Africa growth story. Now for what you really came to see this video, the money you will get to keep. Let's look at the numbers for Hong Kong first. Hong Kong profit tax rate is 8.25% on the first 2 million Hong Kong dollars of profits and 16.5% on anything above that amount. Not bad, especially compared to Western countries bleeding you dry with 25 to 35% corporate tax rates. But the real magic? Hong Kong only taxes profits earned from local business activities. Their territorial tax system. So build your product in Hong Kong but sell globally, those international profits could be completely tax-free. Personal income tax in Hong Kong, maximum 17%, and compare that, for example, to Germany's 45 or France's crushing rates. Now, let's talk about Dubai. And this is where it gets interesting because zero personal income tax, and I'll say that again, zero personal income tax. So think about earning 500k US dollars, and this is what you're gonna earn annually. In the UK, you'll be handling around 200k to HMRC. Germany, about 180k to the tax authorities, but in Dubai, you will keep every single dirham. And Dubai introduced a 9% corporate tax rate on profits exceeding 375,000 dirhams. So that is around 102,000 US dollars. But most people miss this. Certain free zone companies can still benefit from a reduced 0% corporate tax rate on qualifying income. And I also made a video about qualifying income that you can check on our page. And the capital gains, property profits, crypto trading, all completely tax-free in Dubai. So what is the bottom line? If you're purely chasing the lowest possible tax rate, Dubai is gonna win easy. But taxes aren't obviously everything. Let's talk about actually accessing your money and running your business day to day. Hong Kong banking is legitimately world class. HSBC, Standard Chartered, Bank of China. You can open accounts in any currency, access global markets instantly, move money internationally without jumping through hoops, but compliance requirements have gotten a little bit stricter. Opening a business account takes longer as it now used to do in the past. So Dubai banking has transformed dramatically, and 5 years ago I would definitely say Hong Kong was miles ahead, but today the gap is closing really fast. Emirates MBD, ADCB and the digital banks are offering services that rival anything in Asia, and the real advantage Dubai has is speed. They are really fast. I've seen clients get UAE companies set up and bank accounts opened in weeks, not months, and Hong Kong can be more bureaucratic a little bit as well. We open a corporate bank, for example, in 1 week at MFast. So for every business operations, both work brilliantly. Dubai has the edge in convenience and also government efficiency, and Hong Kong has deeper capital markets and more sophisticated financial products. So you're not just choosing a tax jurisdiction only, you are really choosing where to potentially spend significant time building your life, of course. Hong Kong is expensive, like serious expensive, and a decent apartment in Central costs more than the most people annual salary. So you're looking at shoebox living unless you're making serious money now. The energy is intense, fast-paced, competitive, everyone's hustling 24/7, and some people thrive on that like me, but others burn out quickly as well. Dubai offers luxury at relatively better value. You can live well for less than Hong Kong, with actual space, sunshine 350 days a year, and infrastructure that actually works. And the social scene in Dubai is, in my opinion, incredible for entrepreneurs as well. Every networking event has people building genuinely interesting businesses, and Hong Kong has that a little bit too, but I'd say that it's more traditional finance focused these days. So both are extremely safe, but Dubai might have a slight edge just because of the government's obsession with security and reputation these days. Now, let's talk about your options for actual getting started. Hong Kong company incorporation is straightforward. Usually takes 1 to 2 weeks. Costs around $1,500 to $4,000, including all fees. You need a registered office, company secretary, and at least one director for your substance requirements. Banking as where it gets really tricky. Major banks want to meet you in person, see business plans, understand your model, budget 4 to 8 weeks for the full process. Dubai, multiple options now. Mainland companies give you access to the entire UAE market but have more requirements. Free zone companies are easier to set up, often with 0% tax benefits if you qualify for that, but have more restrictions or local businesses. The MCC, IFSA, the IFC, each free zone has different advantages. Setup costs range from, let's say, $5,000 to $15,000 depending on the zone and package you choose and what you obviously need. And the real difference is that the Dubai's government wants your business. They've streamlined everything to make setup as painless as possible. And Hong Kong is more professional, but we can say it is also more traditional. So which one should you choose? Choose Hong Kong if you need deep access to Chinese markets, you're in traditional finance, or need sophisticated banking, you prefer established regulated environments, and you're comfortable with moderate tax rates for minimum legitimacy. But choose Dubai if you want zero personal income tax, you're building a global location-independent business, you value lifestyle and modern infrastructure, you want government support for entrepreneurship, but the smartest entrepreneurs I know don't choose just one. They use Hong Kong for Asian operations and banking, for example, and Dubai for tax residency and lifestyle. So that's the real insight most people miss these days. So these aren't mutually exclusive choices. You can structure your business to take advantage of both sides, Hong Kong and Dubai. So the data backs this up. The UAE is projected to receive around 6,700 high net worth individuals by the end of 2025 these days, making it the leading destination for migrating millionaires globally. And meanwhile, Hong Kong is fighting back for new initiatives. The Hong Kong budget 2025 includes tax support measures and allocates 1 billion Hong Kong dollars to set up an AI research and development institute now. And look, every day you are gonna be delaying making this decision, you're potentially leaving hundreds or maybe hundreds of thousands of dollars on the table. Whether it's Hong Kong's traditional advantages or Dubai's zero tax benefits, the key is taking action, of course, otherwise nothing is going going to change. And at MFAS, we've helped over 3,000 entrepreneurs navigate exactly these decisions. We will analyze your specific situation, show you the real numbers, create a real strategy that actually works for your business. And if this video opened your eyes to what is all possible in the world, smash that like button and subscribe for more insights that most advisors are not going to tell you, but we are going to do it in this channel. Do you want to see which jurisdiction makes sense for your situation? Visit our website at mefas.com or book a free consultation on the link in the description. Let's turn your tax optimization from a dream into reality. So now my question to you is, which party are you now? Are you at Team Dubai or Team Hong Kong? Drop a comment below and let me know which advantage matters the most to your business. And again, thank you for watching, and I'll see you in the next video.